Rohr here with early concise highlights on Wednesday, November 26th, 2014. It's currently 6:45 a.m. U.S. Central Time, and this will be concise today because in spite of it being a couple days, most of the foreign exchange view is exactly the same as our global view from Monday morning. And there are quite a few interesting macro factors that are developing in the markets, and we will get to those shortly. So what does all this mean to the markets? Well, that QE factor is very interesting insofar as it is keeping the equities and government bond markets bid together. And we've been focusing on that for about the past 2 weeks now, where it became obvious, along with the weakness of energy prices, there are multiple stimuli out there that are in a position to bring an anticipatory bid to equities once again. At the same time, the govies like the weak news. In equities, bad news is good news is a bit of a tongue-in-cheek saying. In the govies, it is just the way it normally is. And what we see here is a market in the S&P 500 that is up against the 2070 topping line on the weekly chart. Last Friday, when it was at 2065, it exceeded it pretty nicely on the gap higher opening off the Chinese rate cut influence and all that, but then sagged back and left a critical high up here at 2072.5. Well, note where the market topped yesterday when it was strong early in the day and didn't quite get back through it. And it's going to be very interesting through the course of the day today that the aggressive up channel starts off at 2063 this morning, but by the time the market closes, the pre-holiday close, it's up to 2069 more or less, above almost all the recent trading and right around the 2070 area. So we've got quite a bit of tension in the trend of this market right now, and in fact it is up modestly this morning, sitting right at about 2070 or so. And lower support, even if it should break this channel line, and ultimately it would need to get back below the pullback low from yesterday and the gap higher that we had to start the week. That's right around the 2063.5 to 2062 area. If it gets below there, again, you've got further support into the mid to low 50s, and again, especially 46, and that significant congestion we spotted into the middle of last week that held on the sharp sell-off, especially the sharply lower opening on Thursday, back down in the 2040 to 36 range. If it should escape 2072.5, this is significant, the next oscillator resistance, if it's out through 2063 is the oscillator this week, is not until some all-time high oscillator resistances up at 160 to 165 over the 41-week average. That points to 2095 to 2100 as the next potential resistances. The one thing the bears have going for them, and why it's so important for the bulls to get the market out above the 2072.5, is that after the push up last Friday, yesterday's drift sideways finally left the hourly MACD back below its upper runaway band. And it really, therefore, puts a bit of burden of proof on the bulls now to get the market rolling on the upside, or maybe attract at least some near-term selling. And that pretty much does it for the short-term view of the S&P 500.